Albert Einstein has been credited with once saying that compound interest is mankind's greatest invention, and even called it the eighth wonder of the world. Even Benjamin Franklin described it as money makes money, and the money that makes money, well, makes money. There is no better way to harness the amazing power of compound interest than with dividend investing. And I'm going to model this for you in the next 5 minutes and show you these simple steps you can take today to create a never-ending and ever-increasing snowball of cash flow. One of the biggest questions I get on the channel is I wish I would have started earlier with investing, and now I feel like I just don't have enough time to save enough money to retire comfortably with enough cash flow. This issue is compounded by the fact that dividend investing doesn't appear to be achieving any real results for the first few years. But it's during the early stages of dividend investing that you are setting the stage for a massive cash flow operation. The best way I can describe it to you is like a long freight engine train. A really long train that is sitting idle. If you have not seen this in person, I bet you've seen it in the movies. These trains take forever to get started. You could probably walk or run faster than the train for a while. But once the train picks up speed, once it really gets going, it has so much momentum, so much forward energy that it just cannot be stopped. Let's look at a real life example. For this example, we will look at a dividend stock that has a history of raising their dividend consistently for the past 25 plus years. Chevron Corporation. Ticker symbol CVX. I chose this dividend stock because the real key to creating a massive cash flow snowball is dividend growth. At its core, the very act of receiving dividends and reinvesting them as you receive them does create a dividend snowball, but a consistently increasing dividend creates a much bigger and a much faster snowball. Chevron Corporation has a current yield of 3.55% and a dividend growth rate over the past 10 years on average of 5.30%. What would happen if we went back in time to 1997, 25 years ago, starting with $0 and invested $250 a month? Now we know that times are turbulent right now. We've got ever increasing inflation. However, most average Joes and average Joe families out there can afford to put away $250 a month and likely have the ability to increase that amount over time. But the question remains, what is actually possible when only investing just $250 every month? Let's take a look. After contributing only $250 every month, your total investment balance would be approximately $324,019.41. Of this amount, only $75,250 is contributions, and the remaining $248,769 is growth in the portfolio. The most recent calendar year would have resulted in annual dividend income of $11,184.07. If you look at the graph, the first 5 years seem like pointless investing. Your portfolio is only worth $14,000. But during this time, you are accumulating many shares that will continue to pay more and more dividends. If we were to extend the time frame an additional 5 years, and assuming the same price history over the next 5 years that occurred in the previous 5 years, and assuming a dividend growth rate that matches the 10-year compound annual growth rate of the stock, if we look for an additional 5 years, we now have a portfolio balance of $612,937 and annual income in year 30 of $17,204.49. Remember, this assumes you keep your contributions fixed at only $250 a month for the entire 30 years. I think most people can increase their retirement contributions over time. Dividend investing is all about, well, income. I'm not trying to insult your intelligence here when I say that. Because dividend investing is all about income, we know it has to be about how many shares you own, which are directly correlated with how much income is generated from the portfolio. We get too caught up in portfolio balance when in reality, it is about how many shares are owned of an investment. In a perfect world, we would have an investment that has a completely stagnant price over a period of 15 to 20 years. Conventional wisdom tells us this is a terrible investment, but with lower prices and reinvesting dividends over that time, you are able to accumulate so many more shares of the investment. More shares equals more income. Let's say you were in a position to contribute more than $250 a month to your dividend investments. Continuing with the same Chevron dividend stock, let's increase the investment to $500 a month, a fixed contribution amount that never increases. If you contributed $500 a month for those first 25 years, you would have a balance of $646,123 and an annual income of $20,201. Waiting an additional 5 years, using the same criteria as above would lead to a portfolio balance of $1.222 million and annual dividend income of $34,310. This is income, by the way, being generated by dividends. You don't have to sell shares of the investment to generate this income. It is going to continue year after year, and it will continue to go up every year, even if you're not reinvesting dividends. You can see the dividend snowball at work right here, and this is the portfolio balance. You see how in the graph we start very small for a very long time, like we spoke about, starting slow, and then really in years 15 to 20 and then 25 to 30, we see massive growth here. The blue is up to year 25, and then the orange is years 25 to 30. Here's a look at the annual income year over year for Chevron. You'll notice that the graph continues to slope upwards more and more every single year, to the point where if we continued out 35, 40, 45 years, it would be really, really significant. Now, could you just decide to keep your investing ultra simple and just hold low cost index funds over the long term? Absolutely. And you would still find success. The reason dividend investing is so magical, yes, I did say magical, is because it puts you in a position where you don't ever need to sell shares to generate income. You are not at the whims of the market and stressing about when to sell shares so that you don't sell at a really low price when the markets are down. The dividend investing snowball is magical. It slowly compounds your dividend income into many more shares and leads to a runaway cash flow machine that cannot be stopped. In a future video, we will cover everything you need to know about how to get started dividend investing as the complete average Joe out there. For now though, here's a video you can check out to keep learning more about how to get started. Thanks for watching, and make sure to leave your 2 cents in the comments below.